Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, April 25th, 2007, and today we had another roasting of the shorts as the spiders were up $1.38, or just about 1%, and it just must suck to be short in this market. If you're enjoying big gains here, don't confuse your gains, like they say, with a bull market. Your gains for being smart. We're in a bull market, and enjoy it as long as it continues to rally. A lot of people have been sending me emails with charts of their oscillators and indicators, and this has been happening not just today, but the last couple of weeks. I've gotten some of these saying, Brian, we're overbought, we're overdue for a correction, and I agree that we're overbought. I don't know if we're overdue for a correction. That's up to the market. We've got this very nice series of higher highs and higher lows, and it's getting easier in here, and I think that just means that you've got to raise your awareness of the possibility of a pullback. Keep your money management principles real strong in here, and continue to enjoy the gains. We've been looking at this rising 5-day moving average, and I've been saying as long as it continues to advance, then we're going to give the benefit of the doubt to the buyers in the short term. Yesterday we had our support level that we were looking for tested at 147.5. That did hold, and this morning we gapped up, pulled back a little bit, and continued strong right into the close. After Amazon's big numbers, or big response to numbers, I didn't look at the earnings, but this stock gapped way up here and continued to close right up near the highs. And you know, anyone that's selling short a company in an uptrend like Amazon clearly was prior to this. I mean, it was looking like a good bullish pattern. Of course, I didn't point it out, and it's hindsight here, but if you look at this, you know, it was up on big volume, low volume correction in there. It had broken past resistance here. We had that 10, 20, and 50-day moving average all heading higher. It shouldn't come as a surprise that the stock was up. Maybe the magnitude of the move should have come as a little bit of a surprise. But the bottom line is we're in an uptrend. News and surprises tend to follow the direction of the trend. So that's what you have to be aware of. We're going to continue to give the benefit of the doubt to the buyers. I think that we can now say probably about 148.25 is the level that I would be concerned about if we got below that in the near term. But it continues to be very strong, so let's continue to give the benefit of the doubt to the buyers. There's no reason to doubt this strength in here based on anything as far as technical analysis goes. The Qs, the Nasdaq 100, also, you know, yesterday this market rather, broke out to new highs, and it continued to add to those gains as the shorts continue to be squeezed in this market as well. 45.20 was the level that we would had previously been looking at as far as the best level of support, and I think we can continue to ratchet up our support levels and say that now that I think maybe down near about 45.80. If it gets below there, then we want to be a little bit more cautious. But again, we've got a great uptrend. If you're looking for a place to enter short, wait until the market starts telling us that the time is right. Look at how this 5-day moving average has acted as support a few times. Wait for this thing to flatten out, the market to get below it, and then it acts as resistance if you want to take any short-term shorting trades. But it's just not there as far as the short sale goes. The Nasdaq 100 monthly time frame, obviously we've got a much different picture than the S&Ps. It's up in an area where you might expect there to be a little bit of resistance from this early to mid 2001 little rally after the severe drop rather. But it's only a potential level of resistance. Let's just continue to look at the direction of the trend and continue to give the benefit of the doubt to the buyers as long as that trend remains higher. And this new leg higher has been driven somewhat, obviously by earnings, but also by this breakout, very significant breakout in the semiconductors. And this was a range that we had been looking at for nearly a year in here. So when you have a market that's dormant like that for such a long period of time, then it finally breaks out, you're typically going to have a strong move like we have had here. And this was made stronger by the earnings from Texas Instruments the other day. So again, continue to give the benefit of the doubt to the buyers. If you're looking for short sale entries, you're wrong. Your oscillators and indicators, throw them all away. The only one that matters is price. Support for the semis, I'd say, is down near 37 bucks a share. Below that, maybe we get a little bit further pullback, but the trend is higher. And, you know, overall, you look at these markets, they are getting extended, but as long as they remain in an uptrend, it just doesn't make sense to guess as to where the top is going to be. Let's wait for the evidence. Obviously, the risks are higher up here because it's been up so long and we're playing a game of musical chairs. How, you know, where's the next buyer going to be? So just be very careful about your money management. This market could gap down tomorrow, 1-2%. Who knows? It's anyone's guess. But we are in earnings season, so there is risk. And the Russell 2000 did break past the recent level of resistance at 82.55, 82.60, popped back in there. So this market, again, it's in an uptrend is the most important thing. It's at all-time highs. That's what really matters here, is not whether it held on to its rally or not. The fact is it's in all-time high territory, and that's, you know, going to continue to roast the short sellers in here. Let's take a look at the stocks we've been involved in. EXEL. We got involved in this one back here, I think, at 11.05, and let's now raise our stop to $11.26 in EXEL. Polycom, we were short, and we had lowered our stop to break even. The stock gapped up this morning, and you should have been stopped out at break even at $33.20 a share. FMCN. This stock we were short. Unfortunately, it gapped up and above our shorts levels, so we took a 19-cent loss. But in such a powerful bull market, to get stopped out with a break even and a 19-cent loss in short sales is, you know, that's good risk management. At least we're in the right areas as far as, you know, the weaker stocks. Autodesk, ADSK. It suggested buying this one above $40.60. We got that move. We were not stopped out, so let's raise our stop now to break even in Autodesk. And CENX, wanted to buy this one above 49, but it gapped away up to, here, 49.30 or so. So I'm going to say no trade was taking place in CENX. Genelabs, GNLB. Late day, it did get above that 32-cent level, so you should have entered at 32 cents. Let's now raise our stop to $2.24. It had been at $2.21. TASER. This is why you got to know when earnings are due out. If you bought this stock yesterday because it looked good and it was breaking past a little level of resistance, it opened down here and continued lower. So we were waiting for a pullback and then to buy strength. There was no reason to get involved in that trade today. SIGM, we were involved in a short sale here, and I suggested selling it short below $27 a share. You can see we did get that move. Let's lower our stop down to $27.55. I bet you we probably get stopped out tomorrow because of this big volume. In fact, you might even want to cover it in the after hours.